Hello and a very warm welcome to Rajya Sabha Television with me, Frank Pereira. India's gross domestic product grew 7.6% in 2015-16, powered by a rebound in farm output and an improvement in electricity generation and mining production in the fourth quarter of the fiscal. Economic growth was estimated at 7.2% in 2014-15. The growth numbers for the last fiscal came on the back of a strong 7.9% growth in the last quarter of the previous fiscal. The following quarter, the GDP advanced 7.1% year-on-year and missed market expectations of 7.6% growth. It was the lowest reading since the fourth quarter of 2014. In the second quarter of the present fiscal, the growth was 7.3%, better than the previous quarter, but missing the market expectations of 7.5%. On this edition of The Big Picture, we will look at India's economy over the last 1 year and what to expect in the final 2 quarters of the current fiscal. Joining me on the program today are Ajay, former Secretary, Ministry of Commerce and Industry. He is also an economist. A.K. Bhattacharya, Editorial Director, Business Standard. Ashok Singh, National Vice President, Indian National Trade Union Congress, and S.K. Sarkar, Senior Economist. Thank you so much, gentlemen, for joining me on the program today. Mr. Sarkar, I'd like to start with you, of course. Let's talk about Q1 of 2016. We saw robust growth of 7.9%. It outdid expectations, which were somewhere on the lower side of 7%. And, what were the factors that contributed to this robust growth?
Well, first thing, of course, we'll have to look at it. This is the new series as vis-a-vis the old series. So there's some controversy on the new series, but coming back to your question, the growth was actually started with electricity, which took off at quite a fast pace, and then the consumption, the private consumption figures picked up. Not so the private investment, which actually petered down to quite a bit. And public investment, of course, did not keep up with what it should have. So these were the factors which contributed to the growth, which, as you call, was fairly robust. But then, of course, then things started declining a bit. The downslide started after that, and we now have some issues where, of course, the global slowdown also contributed to I can't blame my country for everything. But now with the oil prices rising, and they're rising pretty fast, and OPEC saying that they are definitely going to cut the daily productions, which is 1.2 million barrels a day. And then, of course, we have the right wing, which is playing a major role in all over the world. These are starting with Brexit, and then Donald Trump, and then, of course, we have Marine Le Pen also. So these are factors which are going to now tighten the economy quite a bit. And personally, I don't foresee any rise in the GDP in the future, in the immediate future. And we'll have to live with lower growth for some time. And obviously, switching over from a cashless, from a cash economy, which was about 78%, to a digital economy, would also take its toll. And we would definitely be not in a position to grow as fast as we thought in the first quarter we would be growing, which may not happen in the immediate future. So let's cross our fingers and hope for the best. But we have difficult times ahead.
Okay, before we talk about the difficult times ahead, let's focus on what's happened thus far. Mr. Dua, from 7.9 in Q1 of 2016, we went to 7.1 in Q2 of 2016. And then thereafter also, we saw that India's growth has been pretty much, a constant as far as the 7% mark is concerned. We've consistently been above the 7% mark. What are the factors that are contributing to India being a bright spot?
Let me start with Q1, which Mr. Sarkar just talked about. Q1 of this year.
This year, yes.
Which is really Q4 of last year. I think our agriculture had done very well in Q4 or Q1 of this year, Q4 of last year.
Yes.
We had a record 5.5 or 5.6% rate of growth there. That had contributed significantly, besides the reasons pointed out earlier. Thereafter, I think we are seeing issues with respect to domestic demand petering out, and domestic demand which had kept up whole lot of, I would say, the constituents of the GDP, be it the industrial sector, be it the services, we have seen a decline in all of the slowing down in all of them. In fact, if you would see between April, now moving on to the
Yes.
between April and September, the IIP has shrunk, the index of industrial production, and manufacturing has recorded its lowest since 2000, lowest rate of growth, which is minus 0.1%.
Indeed.
Compared to 17.8% recorded in the year 2006-7 or 2007-8. So we have a major issue there because of aggregate demand. Demand not being there, we are not seeing investment taking place, there was surplus capacity there. However, the green shoots of recovery were coming through, particularly in the agriculture, actually literally in the agriculture sector, because we've had a good Kharif crop. The Kharif crop had led to demand for 2 or 3 products significantly. One of these was automobile. We have seen this year two-wheeler automobile growth as the highest in several years, and tractors were also, many of those were sold. We were just about entering growth in the commercial vehicle sector, which is a significant one.
Yes.
And then, of course, all the other four-wheelers, which are passenger cars, etc. Where we have not seen the growth there is in the capital goods sector. It's been extremely slow capital goods sector in Q3, or I would say straight from April till September, last 6 months data. Services sector, which is as dependent upon industrial growth as it is on overseas exports, particularly for IT services, which are a major constituent of our services sector, we have seen difficulties in increasing our exports.
You know, the numbers on the services sector, Mr. Singh, are still fairly decent, also probably because of this payout of the 7th Pay Commission, and hence the services sector has seen a decent growth. If it wasn't for that, would you say that services sector also would have been damaged badly?
Sir, I want to say something else. Neither I'm economist, neither the bureaucrats. I am working with the working class of the country,
Yes.
which is 47% of the total population of the country. And they are suffering more. If we are discussing here, we are sitting here to discuss the economic growth of the country. I want to say something in a very easy way. Economic growth of the country, what do you mean of it? It should be in the statics, we're part of statics. It should be in the paper, or it should be on the human face. So, where the human face is concerned, the growth is estimated growth. So, for the 2016 is concerned 7.4. And now it's become 7.1. And the workers are losing their job very badly. They're going their home without their salary and sitting idle at home. How they will survive? It's a question. It's a burning problem now. You go to village, you just see the farmers are sitting idle. They are crying. They're not crying, but they're sitting patiently because the poor men of this country have a lot of patience. They will not cry. They will cry on the time. When the time will come, they will cry. Certainly, they will in the action. I want to say, what is the policy of the government should be connected. It should be related with the common man of the people, not meant for some people. Only 2 or 3% of the population of the country they are paying tax. 96-97% they are out of the tax. We must make the system like this. Everybody wants to pay the tax. Then there will be then economic growth can be higher. Now, certainly they will queue like this. Today you can see and go anywhere in the country, you can see the people on the line. If you relax the tax system, the 100% people will come in the tax, like 10 to 15%. If you are earning lakhs, our economist friends just telling me, then the 30% they have to pay, and above that also 30%. Then how it doesn't look nice. You can't compare with those two. This is the main problem actually. People are losing their job, then how the economic reforms can take place. Now, I'm taking one example. BHL is a Maharatna, one of the Maharatna of the country, always in the profit. last year became more than lost 2,000 crores. Now it is the profits last week 200 something. Because you know why? Why this is? They got the order from the Telangana, the state government.
Yeah.
But the project is lying with the Environment Ministry for the clearance. Like I'm very happy to the Prime Minister. Once they see his face in the 8th evening, 8th afternoon, after 12 there is no 1,000 rupees, 500 rupees in the market. Fine. The same way he can say the Environment Ministry, look here, the moment you got the proposal today, it should be clear within 15 days. Otherwise, it should be already should be take clear. Like this, economic growth or anything can take
Point
place.
taken. Point taken. I think Mr. Sarkar also wants to add something to that.
Yeah, I just wanted to make some quick points. I totally agree with Mr. Dua when he says that agriculture has played a major role in the pickup in the GDP. But we must also remember that right now the government policy on the cereals have been a little flawed. And if you look at wheat today, the import duty has been taken away totally, whereas on steel the import duty is rising. So it's the industrialist who's getting the protection, whereas agriculture is not getting the protection which it needs, despite the fact that 65% of the country's population is involved over there. So there's okay. I mean, there are some arguments which says that there's a shift towards commercial crops, which is a very good thing. Pulses and the MRP also going up over there, but there are also but we didn't foresee the government projections were not really on target at all. They were talking about 82 to 83 million tons, whereas 92 to 93 million tons, whereas we would at best we will have about 82 to 83. Now coming to what Mr. Ashok Singh was saying on services, I am very, very disturbed over there. You see, your PMI, the services PMI is below 50, which means you are in a negative territory. You're actually 46.4. Now that's something which is not too good for an economy like ours, because services plays such a major role in our GDP. Now that being the case, this needs to have a relook as to how we're going to solve this. And with Donald Trump saying that H-1B visas would not get preference over American workers, so that's another area where the IT industries are also very concerned. So putting two and two together, these are factors which are going to be roadblocks in my growth. India's growth tomorrow.
Let me bring in Mr. Bhattacharya into the picture as well. Mr. Bhattacharya, do you foresee any further roadblocks as well, apart from the ones that have been raised right now?
Well, let me make 3 quick points in this context. Number one is that nobody can deny that deceleration is upon us. If you look at quarter on quarter in the first quarter, if you look at second quarter on second quarter the previous year, and even if you take the first half over the first half of the previous year, I think there is a clear deceleration, and this deceleration has happened. That's the second point I would like to make. It has happened not because has happened because the investment demand has continuously fallen. Probably this is the first time in recent times that India's GDP has been clocking 7% plus growth over the last few years, and in spite of that, you have seen the fixed capital formation rate has consistently declined. Now, if you do that, you are essentially making sure that the economy is running only on one engine, which is on demand. And I don't think the economy can run for long if you just rely on consumption demand. You have to revive investment demand, and for which my concern are 2. One, I think the government's investment capacity is very limited. The government has already rolled out 70,000 crore of extra money, of which 55,000 crore has already been invested. Now, very little is to be spent in the remaining part of the year. So the government's investment capacity is limited, and the private sector's investment capacity is very anemic right now, thanks to the banking sector huge NPA levels. And that's my final point, that if you want to tackle the investment issue going forward, the government is too preoccupied in tackling the disruption that has been caused by the recent moves on demonetization. So therefore, and plus probably government will also be busy rolling out the GST. So you see a real problem going forward in your GDP numbers, where you might see that neither the investment demand issue is tackled properly, nor you have tackled the capacity increase. Because unless the capacity utilization is rising, right now the RBI estimate is around 74% is the only capacity utilization level in the Indian industry. So unless the capacity utilization goes up, you don't see the Indian industry also investing more. So in a sense, we are in a catch-22 situation. So I'm not too hopeful of the way our GDP will perform. The last point I would like to make is this, that we will still show some increase in our GDP. Probably we will clock the same GDP numbers simply because our tax collections figures and the subsidy reduction will be very good compared to the previous years. So therefore you will see increased divergence between GVA for the full year in the current year and the GDP, because the GDP is calculated after including the tax collections and excluding the subsidies. So I think these are the 4 broad points I'd like to make at the start of this program.
One small statistic for the benefit of the viewers. We're talking about private investment not picking up. If you look at the gross fixed capital formation, it's actually fallen from 32% to 29%. And the gross fixed capital formation is other than land, but development land and plus other fixed assets, less whatever has been disposed of. Now, if that is not rising, in fact, it is falling, and the 3% fall is a large fall, this is bound to have an effect on the GDP of the future.
Indeed. Mr. Dua, you were someone who brought up demand earlier in the program as well. Demand has been spoken about consistently on the show for the last 15 minutes. How do we increase demand?
I think a host of actions are now required. One of which, and I think all the other panelists have talked about it, irrespective of what the Monetary Policy Committee recommended to the Reserve Bank in its last policy review, I am looking forward to, if we have to revive the economy and address the constraints of, what was income is very simple Keynesian terms, GDP or income is consumption plus investment plus government expenditure, C plus I plus G, what happens, we need to address all 3 of them. And the demand for investment goods will build up, or the appetite for investment will build up, if the Reserve Bank were to readdress this issue of rates of interest, repo rates and reverse repo rates. I think the time has come for the Reserve Bank to, though it's now legal.
Even if the rates are lowered, in the present economic scenario, in the present mood, are there takers for loans?
No, Frank, I think they would be, for the simple reason that as against if you are borrowing at 7%, 7.5%, if you can borrow at 2% lower or 1.5% lower, there can be incentive for undertaking investments. It may not be in necessarily manufacturing. But manufacturing today is only 15 to 16% of the economy. The rest of it, there are many other places where investment can be done. Second, I see the government now, irrespective of its fiscal position, the government is probably going to be getting much more coming into its coffers, and if it were to not go astray on its disinvestment plan either, because they have targeted a huge amount of revenue from there. If they were to go forward, I see the government in a position to pump prime the economy by increasing the expenditure on roads, ports, electricity. Electricity is an issue which I'll probably come back to if I get an opportunity a little later. Those kind of investments and railways, those are the ones which can drive the economy much faster. And when it comes to the demand for automobiles, FMCG products and white goods, the non-consumer durables, I think the way forward there is an optimism there. One is a good rabi crop, continued expenditure on social security schemes like the Manrega and the Pradhan Mantri's, the rural mission, the health mission and the roads, the missions which we have connecting the rural areas. All those expenditures should continue to be made to the full allocation. If there is demand, like if there is demand from Manrega, which I think will build up now, since the industrial sector and the formal sector has slowed down, then then there will be demand for all these products which today are suffering from the lack of it, and we are talking about 74% capacity utilization, etc. The government role for me now in the next 4 or 5 months
is most crucial
in order to boost to lift the sentiment in the economy.
Are you happy with that assessment, Mr. Sarkar, that the government, the impetus is on the government to ensure that the growth is robust or growth is above the 7%
Well, in a
mark?
way, yes, because public investment has to take off. Private investment is not taking off, and I would agree with you when you say that the business confidence is fairly on a absolutely at rock bottom right now.
Sectoral limits also have been reached as far as loans are concerned. So that is another thing that needs to be looked at.
And I see a major hiccup where when you look at the credit growth, it is only about 8.5% over last year. Now that is no growth at all. And even if you break that up, it is actually the retail loans which have taken off, not the industrial loans at all. And if you break it up further, if you look at the MSME sector, the medium scale is actually is not growing at all, and the SME sector is actually in the negative territory. So that is the kind of confidence, lack of confidence that we have amongst the businessmen today in this country. My capacity, I mean, according to which Mr. Dua, of course, also pointed out that 74%, 70 to 74% is my capacity utilization today. I need to get rid of my inventories first before I take off.
Yes.
Now that is where the government has to play a role. Now, how does it play a role? It has to create that demand for those products. Otherwise, unless I'm able to get those off my back, I cannot think in terms of new investments. So that is something which we have to be very, very careful about. And obviously, the government will have to. I mean, I'm not saying the government should go and become a marketing personnel for the industry, but they have to create those conditions under which we can succeed. I'll give you a very simple example over here. And policy making does not mean that you have to make very huge investments all the time. Have you ever heard of a thing called dental insurance ever in your life? Now, if you have that scheme of dental insurance, what happens? It gives a boost to that particular profession. I am not advocating I'm not holding a brief for the dentist, but the point here is that it gives a boost to that particular profession. So you got to think, what my point here is that you've got to do some out of the box thinking.
Indeed.
To create.
Yeah, very quickly, so that I can get my other guests in as well.
I think the real estate sector is the one which the government must look forward, must assist in ways more than one, because of the forward and backward linkages of real estate industry are huge, the largest probably. And one way would be, of course, making loans to housing loans much cheaper, and that's where my policy issue of the Reserve Bank comes in.
Indeed.
The second is with respect to land being made available, because now land is to be, all land will have to be paid for in checks, by checks. So that's much easier. But whether we are in a position now to look at the land acquisition law, which was amendments which were deferred.
And you need to digitize your land records also, because that's very important.
I'm saying
it all has to happen simultaneously. Yes.
So that's how
all those things we need to look at in order to revive the real estate industry in the country.
Sure. Mr. Singh, talking about lack of confidence, he spoke about, Mr. Sarkar spoke of lack of confidence.
I want to say something about Mr. Dua has said about the real estate. He said about only the land acquisition, about the rate of interest, about the electricity and others. But so for the human capital is concerned, about the 10 crores of workers, construction workers, they are working in this field. And they don't have any social security, they don't have any skill.
Indeed.
They don't have a minimum pay, minimum wages. They don't have any education facility, health facilities. Any kind of social security they don't have. Suppose there is no insurance also. Then how you can expect the one side? It's human. You are taking care of the only capital, not for the human capital. Capital cannot run without the human capital.
Holistic approach is what you're saying.
Yes.
Okay, fair enough. Mr. Bhattacharya, I've got 2 minutes on the program. Going forward, of course, what are the sectors that we need to look at? What are the sectors that we need to keep our eye out for?
Well, as I said, there are 3 things. I always rely on 3 points. The first point is the government must start remonetizing the economy as fast as possible. without remonetizing the economy, you are really killing demand, and demand disruption is going to cost the economic growth dearly. Number two, I'm not very sure if interest rate reduction will really help at this point in time without taking other collateral measures, because I don't see demand for credit really waiting to pick up. There is not much demand for credit right now because the private sector is just not in the position to increase investment, and therefore the credit demand is very tepid. And number three is that this is the time where the government must come out with a pro-investment budget, and that budget will be coming on February 1.
Indeed.
And Urjit Patel's next policy will be coming on 7th of February. So therefore, if the RBI is sufficiently enthused by the pro-investment budget, which means the government really goes all out to increase investments in all key areas so that there is at least a government-led investment demand that picks up, then probably the RBI governor has some reason to look at interest rates, and by that time he'll also know that what has been the Janet Yellen response to the monetary policy thing, by which time things will be more clearer. So I don't know whether interest rates will in itself will help, but remonetization and a pro-investment budget are certainly the must measures that the government must look at.
Okay, fair enough. Mr. Sarkar, final closing comments from all of you, because I've got just 1 minute left on the program. How much of an impact is demonetization going to have on the figures of the next 2 quarters?
Well, I think the professor made it very clear the remonetization has to take place. The demonetization is obviously going to bring down the economy to a considerable extent, because we are a cash economy, and transferring ourselves from a cash economy to a digital economy is obviously going to take quite a bit of time, and especially when the financial inclusion does not exist in the hinterland. So these are factors which we'll have to consider, and remonetization has to be very fast. But today itself, the news was that the government is importing 20,000 tons of currency paper. Now that means there's a tremendous amount of shortage over here. The RBI's printing press is not working to the extent it should. So all these factors will have to be. People will have to work overtime to remonetize. I think remonetization has to be a very fast process.
Mr. Singh, your final closing comments.
I want to say only one thing.
Yes.
We are here to discuss the economic growth. Then we cannot separate or apart it human capital from the capital. Economic growth can take place only in the country if we take the same behavior with the capital and the human capital.
And Mr. Dua, what can we expect from the budget?
From the budget, I'm sure there will be a move to increase the government outlay both by way of consumption expenditure as well as investment expenditure. The government would also try and ease the pain which demonetization has caused, and that could translate both in terms of tax concessions as well as greater subsidies. Is that a way forward, or is it only a temporary measure? Is something open to be discussed.
Indeed, time will tell us whether it's which one of those that really is. Thank you so much, gentlemen, for joining me on the program and putting things into perspective for us. That's all the time we have on this edition of The Big Picture. Thank you so much for watching.